Overall, a very exciting week for uranium if you look at the fundamentals in the news. So let's do that now. First of all, look at North Shore Mining ETF up 2% on the week, whereas the S&P 500 down 2% on the week. That is seriously significant outperformance, even in an environment where the Federal Reserve is talking about raising interest rates and everything is extremely depressed. Uranium outperformed. So this is a good example of when seriously strong fundamentals can overpower kind of macroeconomics. Obviously, it will weigh on markets, which is why you saw kind of uranium dip along with the rest of the market kind of later in the week, but it's showing resilience. And if we look at the Kazakhstan story, it tells us exactly how sensitive this market is. So what happened in Kazakhstan? People there are protesting the nation's fuel price, which is way too high. I guess they're having some sort of energy crisis over there, and the prices are skyrocketing. And the nation had put on price controls on the fuel price, right? So fuel prices doubled the very first day of the new year after Kazakhstan's government lifted price controls, triggering mass protests. So what does this political unrest in Kazakhstan have to do with uranium stocks? So it's, the largest producer and supplier of uranium, accounting for 43% of the world's uranium supply. So the market was worried that a potential disruption in the supply of uranium would cause a spike in the prices. And this speaks to how sensitive the market is, right? Any disruption, prices spike, especially in a supply-demand crunch that we're in. So fuel prices doubled because they took the price controls off of fuel costs, right? That's what governments do in hyperinflationary environments, is they can try to cap the costs artificially. And it's like keeping a ball underwater, because all that does is cause the real market fundamentals to kind of like fester and then bubble up and spike up. So that's what happened. They took the price control off, fuel prices spiked, people are extremely unhappy, they protest, the uranium supply is threatened, and we get a spike in the spot price of uranium. So then uranium dipped because the price controls were put back online. So the fuel price is still going to be suppressed. This is a very interesting development, and we're going to stay on top of it and watch and see what happens. But if the protests get out of hand, if the energy crisis really takes hold and people start freaking out, then the uranium supply will be threatening Kazakhstan. And uranium investors globally are going to do extremely well. So pay attention to Kazakhstan. If there's any news, I will certainly let you guys know. But for now, they've put back on the price controls in Kazakhstan, and the uranium supply is pumping out. So it's not really going to cause a concern. But it did cause uranium to drastically outperform the broader market. Look at the price action on the uranium spot price, jumping from around $42 per pound to $46, 10% move on the spot price, which we know trickles down into the miners' earnings, right? Very positive news for the miners' earnings as well. So as I talked about in my 2022 Outlook video, the most likely scenario for uranium stocks was that they're going to fall alongside kind of a softer market with the Federal Reserve threatening interest rate hikes, right? And so that's really what would have happened this week if not for the Kazakhstan situation. You can kind of see it trading slightly with the S&P 500 and the dips. But what's so fun about uranium investing is that you do get these kind of global events that can shift the supply. And that's why we are investors in uranium. And it's because the fundamentals are great, because the supply is so squeezed and low, and the current spot price is not enough to incentivize the supply for global demand. And so we're kind of waiting for that true supply crunch to happen. So any sort of sensitivity in the market is an exciting news development. And just look at this cool tweet by Raoul Pal. So he's talking about BTC and Amazon, but I drew some inferences on uranium stocks, because he is showing that it's usually when rates have gone too far that stocks get hurt, along with other assets. Thus, any initial sell-offs are usually temporary on initial fears. And when rates finally have gone too far and the yield curve inverts, rates get cut. So what he's saying is that look at the chart of Amazon, right? So the blue line is the increase in rates, and then the white line is the price of Amazon. So you can just see it didn't affect Amazon. I guess the first rate hike you have in 2015, Amazon dips, but then it's flat and it just goes up all the way until I guess the market freaks out because they start getting too high. So it's not necessarily like we're going to have a great depression on the first rate hike. So uranium stocks could still do well, and stocks overall could do well, especially fundamentally strong stocks like uranium. That's my point. So it could take some time for that big sell-off to occur, which is why, stocks like uranium stocks should not necessarily be sold just because they're going to be raising rates. We don't know exactly when that big sell-off will happen. But what we do know is that when it does happen, the Federal Reserve will step in with their big guns and save the market and prop it up like it's always been doing. So if uranium stocks are trading with the broader market and supply chain disruptions like what we potentially saw in Kazakhstan don't cause it to just widely diverge from the broader market, and if it just stays kind of with the rest of the broader market, then we got to look at the rate situation. But just know that it's not necessarily a doomsday apocalypse on the first rate, and it could take some time. Here is some really bullish news. Czech Republic to end coal use by 2033 and boost nuclear power. So the Czech government, says it aims to phase out coal by 2023 and will increase the country's reliance on nuclear and renewable sources. This is amazing. This is a symptom of what we talked about, how the European Union wants to label nuclear power as officially a green power source. So we're seeing the ripple effects. It's just going to keep moving out. It's no longer going to be, let's just focus on renewables. It's nuclear power. It's here to stay. Obviously, everyone knows at this point that nuclear power is much more energy dense and just a much better power source than renewables. And so the Czech Republic, as they weigh their options, are going to realize, oh yeah, obviously nuclear power is the way to go if we're comparing it against renewables, because the technology isn't there on renewables yet. So this is huge, just a symptom, right? This is going to ripple around the world and definitely in Europe. As we've talked about, the story is still bullish in the United States. So an exciting week for uranium investors, a good week for uranium investors. If you're invested in this space, your portfolio is insulated. We're going to stay on top of the Kazakhstan situation. We're going to stay on top of the rate situation. It's all totally related to uranium stock performance. This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.